Good morning. You're watching Businessworld Live. I'm Jes Delos Santos. Here are the biggest stories from the economic and corporate front today, Tuesday. In another sign of recovery from the pandemic-induced slump, bank lending maintained its growth momentum in December last year. The PSE lifts the trading halt on shares of DITO CME, but the board says the listed telco firm may not be out of the woods just yet. Sales of imported cars picked up in 2021 with economic reopening boosting the demand for light and commercial vehicles. And the tourism department says it's all systems go for the reopening of the country to fully vaccinated tourists. We begin our broadcast with bank lending capping off 2021 on a high note. Lending grew for the fifth straight month in December as credit activity improved on the back of the further reopening of the economy. Fresh data from the Bangko Sentral show that outstanding loans issued by universal and commercial banks increased by 4.6% year-on-year to 9.6 trillion pesos in December. This was higher than the 4% expansion seen in November last year and the fastest since the 4.7% growth recorded back in August 2020. BSP Governor Ben Jokno said credit activity continued to improve due to a more favorable outlook from businesses and households amid the sustained rollout of COVID-19 vaccines and the easing of restrictions during the month. Now, Metro Manila and 7 other provinces shift to the more relaxed alert level 2 today. And with the improving COVID figures, some officials say the country is now transitioning to an endemic situation. But does this mean that we are now ready to eliminate the alert level system? Zoni Esguerra with the report.
For about a week, daily COVID cases have fallen under 20,000. On Monday, the total was more than 14,000. The Octa Research Group says this may further go down in February. The IITF shares the same outlook, leading to their decision to relax restrictions in Metro Manila from Alert Level 3 to Alert Level 2. The lower alert level also takes effect in 7 other provinces where cases have also declined.
And that's basically the approach of many European countries. Basically, that if we're going, if we're transitioning to the endemic stage, that means, yes, it's like we're accepting it like flu, that it will be part of, right, it will be part of our lives. Hopefully, there's no mutation that will be more severe that may cause us to change our approach.
Octa Research is not opposing the easing of the capital's alert level, but they warn that relaxing restrictions should be done with care, as there are still a lot of infections, especially in NCR. The group notes that actual cases may in fact be 1.8 times or almost double the figures recorded by the DOH, especially since those positive in antigen tests are not counted in the official tally. Octa notes that there are also patients with mild symptoms who may no longer find the need to get themselves tested.
I mean, we're not testing as much because the COVID has become milder. But again, we'd like to remind that it's mild now. We're seeing mild cases mainly because of the high level of vaccination that we have in the NCR and many other urbanized cities. And pray that it will turn out to be okay, that this will be the exit, Tiger Year will be the exit into the out of the pandemic.
For now, the good news is that a surge seems like a remote possibility, especially since many have already been vaccinated.
We probably won't see a resurgence in cases because of the high number of infections that happened in the NCR during the first 2 weeks of January. Since more people were already infected, more people already have antibodies against Omicron. So we are hoping that that will not happen anymore this coming February or in March, because most people will have antibodies already, or a lot of people will have antibodies already against Omicron. Plus,
for One News, Son Reyes Esguerra, we are One News.
The government is now ready for the reopening of its borders to international tourists on February 10th. Tourism Secretary Berna Puyat confirmed this in an interview with the chiefs. However, Puyat admitted that they do not expect an immediate surge of tourists when borders reopen.
Don't expect na, let's say, 5 Feb 10, dadagsayan. Kasi for example, for leisure travelers, normally, ano pa yan it will take about 2 to 3 months pa, or baka April, May, or June, because diba they still have to magbubuk pa yan ng leave, vacation leave, etc.
As consumption propelled growth for the last stretch of 2021, do we expect that to continue, especially now that restrictions have eased in NCR? How does this bode for the retail sector? Let's find out from Attorney Paul Santos, Chairman of the Philippine Retailers Association. Good morning, Attorney Paul. Thank you for joining us.
Good morning, IC, and thank you for having me.
All right, so first, Attorney Paul, give us an idea. How much of a lift are you expecting here now that NCR and some provinces are reverting to alert level 2?
Well, it depends on the particular retail subsector that you want to discuss. But in general, retailers are fairly optimistic as to the prospects of Philippine retailing in 2022. The revival of Philippine retail started around the last quarter of 2021, when movement restrictions were started to be relaxed. People were getting vaccinated at pace, and the number of infections was on the decline. However, everybody got a rude shock when the Omicron variant of the COVID-19 virus got itself into Philippine shores and drove up infections exponentially. So that put a damper on everyone. And it's only been these past few weeks that the general population and the economy has been recovering from the effects of this rapidly spreading variant. Now that infections are going down again and vaccinations are being resumed and government is planning to reopen the economy once again, I think retailers are all optimistic that business would be much, much better than it was in 2021.
Attorney, give us an idea first. How much of a damper was that Omicron-induced restriction when we reverted to alert level 3?
Well, if going by crowd numbers in shopping centers, anything to go by, during Christmas, some shopping centers experienced traffic counts as high as almost to pre-pandemic levels. But when the Omicron variant hit the country, you'd see shopping center crowds reduced to almost nothing, or maybe just half, or maybe just a third of what they used to be, well, about a month before. So people were very fearful of the effects of COVID-19. And also, again, as another indicator, traffic levels on the roads were almost back to pre-pandemic levels in the weeks leading up to December, January, when news of the Omicron variant started to hit people and people started to get infected. It's as if traffic reverted back to lockdown levels. So that's how bad it was for businesses and the economy in general when the Omicron variant infected people at such an astounding rate.
Mm-hmm. Now, also, let's try to step back a bit here. Growth last quarter in Q4 was at 7.7%, and a lot of economists saying it was really propelled by what we call as revenge spending. Was it in any way apparent for your group?
I think depending, again, on the particular sector, yes, I think a lot of the gains in business during that period can be attributed to revenge spending. For example, I was surprised myself when I visited my shops in the shopping malls, and I took a look at some luxury retail, especially in the electronics sector, and it was very surprising to see queues right outside of the stores as early as around November. So again, people want to spend money. Prior to the relaxation of the lockdown last year, they couldn't do that because rules prevented them from going out and to do their shopping. But once these rules were relaxed, out they went and they started to buy things. But I think think revenge spending would be a transitory thing, as one of my colleagues described in an earlier interview, that this is just probably transitory. What retailers want is sustained spending throughout the year and not just depend on, say, revenge spending to revive their fortunes in 2022 and moving forward.
Okay, given that you guys are after, of course, sustained spending, which subsectors would you say are you most bullish about? And so far, at least in the experience that we've had, I mean, considering that there was a bit of a revival in the last stretch of 2021, which of the subsectors as well have so far outperformed?
Well, I think the most resilient of all the retail subsectors would have to do with food and food retailing. These sectors have always been the most resilient of all, although they're also subject to declines. But the most resilient would be food, then apparel and clothing and footwear and electronics. These are the basics in any retail economy. So these sectors would probably enjoy the most benefit when it regards to any revival in retail, and everything will be revived after that. I think coming from these top sectors, from these sectors that I mentioned, everything will flow after that.
Okay, now, prior to the interview, we did hear a report here. There's a bit of at least a projection that we might actually enter the or that the virus might actually be endemic by the end of the year or thereabouts. How optimistic are you about these projections? Do you expect this to somehow propel your return to pre-pandemic levels?
I think one of the key factors that held back people from shopping would be the movement restrictions imposed by government. And of course, their own concerns about their chances of catching the disease. Now, all things being considered and all things being constant, if we see if people will continue to be vaccinated, if boosters would be available to the general population, and if we see the levels of infection going down, yes, I think people would be very cautious. Cautiously optimistic, I think, would be the word to describe it. But however, again, this optimism is fragile, as you saw what happened during Omicron. A more infectious variant may emerge in the future. We don't know that. And when that occurs, then the cycle will continue. People will stop shopping, restrictions, movement would be restricted until a solution is found to this new infection. The economy will grind to a halt. And as soon as a solution is found, it probably will revive. It will revive until the next variant appears on the horizon. I suppose that's going to be, I think, the cycle that we'll probably see in the near future, unless the COVID-19 itself has run its course.
Mm-hmm. Now, also, apart, of course, from the COVID-19 pandemic, one other major economic mover that we're looking at this year would have to be election. By how much do you expect election activities to boost at least the retail sector's activity here? What possible upside risks are you looking at here?
Well, the effect of election spending on retail is probably the effect of this sort of spending throughout the economy. Since this being a presidential election, spending levels on elections would probably be high. It's going to be a lot higher than, say, the midterm elections to be held about 3 years ago. But from what we've seen in the last few elections, the effect of election spending in the election during this year will probably be limited. Once the elections are over, then we're going to see a resumption of economic activity of what used to be before the elections. But there will be a blip. There will be an increase in economic activity beginning probably this quarter and into the second quarter of 2022. So that's going to be there's going to be serious money to be injected into the economy. People will be spending on all sorts of things and not just on consumer goods as well. So it's a halo effect, I think, more than anything else, this election spending.
Okay, now one other major change, of course, for the retail space, you have the Retail Trade Liberalization Act, at least amendments already being passed into law. That pretty much, of course, trims capital requirement for foreign investors. How is the sector gearing up for this?
Well, the retail trade has been liberalized since 2000. And since that time, many big foreign retailers have been doing business in our country. The limits imposed by the earlier law proved to be no barrier for these big retailers like IKEA, which opened its biggest store in the Philippines. You have IKEA, you have Uniqlo, you have H&M, and other foreign retailers that have come in. And since 2000, members of my association have been ready and are prepared to compete with foreign retailers. The recent further liberalization of Philippine retail will affect small, medium, and small and medium scale enterprises, as the limits were reduced from the former 2.5 billion to just $500,000. So this law will probably and will most likely attract MSME foreign retailers from overseas, not the big retailers, because they have been doing business in the country even with that 2.5 million capitalization in place. So this will attract these small and medium scale retailers from abroad to do business in the country. And in fact, several years ago, you've had a foreign chamber of commerce in the Philippines express delight at the ability of their compatriots at home, their MSME compatriots at home, to be able to do business in the Philippines. So they will compete with Philippine MSMEs, not the big ones.
But how much exactly do you expect this to set back the growth of the domestic retail sector, especially MSMEs? And do you feel like the law has enough protection for local retailers, for the small times at least?
It's still hard to say what the effect would be for Philippine MSMEs when they compete with foreign MSMEs. For one thing, foreign MSMEs, when they do business in any foreign environment, Philippines included, would probably be heavily capitalized for that purpose. No? You have Philippine MSMEs with very little capitalization or just depending on cash flow to do business. So for those who are not prepared for the onslaught of this sort of competition, you would see a Darwinian sort of effect. Meaning, for those who are not prepared or who do not want to compete with foreigners, they'd probably choose to close shop. But for those MSME retailers who persevere and find capitalization to compete with foreign retailers, I think they'd end up being the better for it. So I think that would be the near-term effect. But I think given the pandemic and its effects, probably I don't see any MSME foreign retailers coming in from abroad to do business in the near term, as they deal with their own pandemic consequences at home first before venturing out into foreign countries like ours to do business in.
All right, again, of course, much remains to be seen how this exactly is going to impact the retail sector, the domestic retail sector at that. But again, something to be keeping an eye on. Thank you very much for your time this morning, Attorney Paul Santos, Chairman of the Philippine Retailers Association. Thank you, Attorney Paul, and good morning.
Thank you and good morning.
The local bourse is closed today for the celebration of the Lunar New Year, but here are the biggest stories from the corporate front. The PSE halted the trading of DITO CME Corporation shares on Monday after the telco firm scrapped its 8 billion peso stock rights offering. The suspension, however, was short-lived. The trading halt was lifted later in the day as the company vowed to refund investor subscription payments. The PSC clarified that the lifting of the trading halt does not mean that it has approved DITO's deferment, noting that it may still pursue action over the incident. Trading of DITO shares will resume tomorrow. BPI posted a double-digit growth in earnings last year as the country continues to recover from the pandemic. The bank reported an 11.6% growth in net income to nearly 24 billion pesos in 2021. That's after slumping by 26% in 2020. But BPI still reported a 4.2% decline in total revenues year on year. The bank attributes lower revenues to an increase in operating expenses due to higher technology costs. BPI's loan book also inched up by nearly 5% due to higher mortgage, credit card, and microfinance loans. Now, still on earnings, Union Bank saw its net profits inch up 9% year on year to 12.6 billion pesos in 2021. While bank reported net revenues also rose to 7% to over 45 billion pesos. Union Bank attributes the positive performance to its digital transformation strategy that allowed it to corner more depositors. The bank opened as much as 2.5 million new customer accounts in 2021, 1 million of which were created digitally. And Philippine Airlines has appointed Captain Stanley Nang, the son-in-law of Lucia Tan, as the flag carrier's new acting president and chief operating officer. Nang was previously the firm's senior vice president for operations. He will be replacing Gilbert Santamaria and will now oversee PAL's efforts to maintain momentum towards full recovery following its Chapter 11 restructuring. PAL said Nang is the first pilot to assume presidency of the flag carrier since the early 1960s. The auto industry also benefited from last year's economic reopening. Sales of imported vehicles in the country climbed 14% in 2021. Avid says its members sold almost 59,000 units last year, higher than the 52,000 sold in 2020. The growth was led by increases in sales of light vehicles, up 23% last year, and commercial vehicles, which surged by over 200%. Passenger car sales, however, dropped by 9%. The group looks forward to selling more units this year as the economy further reopens. Coming right up, the Insurance Commission assures the public that insurance firms remain resilient after they paid out billions in pesos of COVID-19 claims last year. More of that and other stories when Business World Live returns. Stay with us. You're still watching Businessworld Live here on One News. I'm Jes Delos Santos. Again, financial markets are closed today in celebration of the Chinese New Year and to welcome the Year of the Water Tiger. Hundreds of spectators flocked to Binondo, Manila last night. A virtual fireworks display was shown on the LED screens of a mall by 12 midnight. Visitors enjoy their time, saying it's a tradition for them to visit Chinatown for the Lunar New Year. Now, sellers, meanwhile, continue to sell Lucky Charms and decoy early morning. They admit, though, that they're still seeing dismal sales this year due to the pandemic.
Every year kasi nandito kami para sumalubong ng Chinese New Year talaga. Tradition na namin siya. Wala namang lahing Chinese sa amin. Pero kasi yung kultura kasi talaga parang ina-adapt na natin siya.
Okay lang po. Masaya pa rin naman po kasi kahit papano, yung ambag ng kahit pure Pinoy kami, yung ambag namin sa mga Chinese.
Now, shifting gears now onto some COVID-19 related updates. COVID-19 insurance claims breached 8 billion pesos from January to September 2021. A survey conducted by the Insurance Commission showed that the figure drastically increased from February to April 2021. More than 30% of the value of claims payouts were for inpatient benefits, while just 16% went to outpatient claims. In total, claims paid from the start of the pandemic and related lockdowns in 2020 to September 2021 have reached 12.12 billion pesos. Now, despite risks brought by the pandemic, the Commission says insurance organizations remain financially resilient. An expert from the Johns Hopkins Bloomberg School of Public Health is expecting changes to COVID-19 policies, and he says the virus may be starting to fade into the background as deaths continue to decline. Let's watch this.
Dr. Sharfstein, it is good news, whether it is the thousands assembled in Los Angeles and Kansas City for football or in the walk-up I live in the lobby, everybody has to wear a mask. There seem to be great polarities. Here's the reality. We see cases rolling over nicely. We see hospitalizations rolling over somewhat. We're waiting for deaths to roll over. When deaths roll over, how will public policy change?
Well, I think public policy is changing in places where the cases are coming down and the hospitalizations are coming down now. So I think it's going to be a regional phenomenon. And then I think, to your point, I think the national mood will really start to change as deaths come much further down. And this is the, approaching the moment, where we are going to see COVID start to fade a little bit more into the background. I don't think we'll have nearly as much disruption in our lives in 2022, barring the emergence of something that we haven't anticipated, which of course could still happen.
The vaccine rate, I'm going to call amateur and Omicron, from 60 or 61 out to 64%. How critical is it to double that out to a 68% statistic?
Sorry, that is what statistic?
The vaccine rate was 61%. It's now 64%, according to most of the media reports I see. How critical is it to double that out to 68%? Does that mean something?
Well, I mean, with every increase in vaccination, we're going to get fewer hospitalizations and fewer deaths. The value of vaccination again proved itself during the Omicron wave. So we have tools to protect ourselves, and we have to keep going. So just because it's going to fade into the background in our lives, the more we are smart about, protecting ourselves, preparing, the more it'll fade into our lives. It's not just by ignoring it altogether that we get that benefit.
Dr. Sharfstein, meanwhile, that's the U.S. and that's Europe, perhaps. Over in China, they've been trying to pursue a zero COVID policy. And we do have the Olympics starting on Friday. Hong Kong is experiencing a pretty big upsurge in Omicron. And one professor at the University of Hong Kong who has researched Omicron said the horse has bolted, and I don't think that the government is going to be able to get on top of this. What's the trajectory of COVID cases that you expect over in China, given the lack of social immunity built up by natural infection and just a normal life?
Well, it's the lack of immunity in part because the vaccines they've used have not been the strongest vaccines. And so they are vulnerable to COVID. There's no question about it. And this virus and some of the Omicron variants we're seeing are crazy contagious. So that's not a situation that's very good. And the idea of persisting in zero COVID without the benefit of better vaccines is a real challenge for China. And, you know, I don't know. It's hard to believe that they could make it through with so many people coming in without it getting out. Of course, they have tools and approaches that we would find unacceptable in this country to accomplish that. So I don't know what's going to happen.
Those tools that we would consider unacceptable, are they even enough, though, to stave off the upsurge in likely Omicron cases and likely COVID cases after the Olympics? Can you game out what it might look like in the weeks following?
Well, I mean, if the Omicron gets out into the Chinese population, it's likely to spread very quickly, given the fact that the vaccines used there are not as effective. And then we'll have to see the scale of the reaction from the Chinese authorities. You know, I don't know what's going to happen. I'm not someone who's going to be able to put together a scenario between the biology and the politics, but I don't think it's going to be, you know, very pleasant for people in China if they go for a zero COVID approach in the setting of such an incredibly infectious variant. So, you know, on the other hand, they may, you know, have to do some pretty significant actions to avoid so many people getting very sick.
Before we end our broadcast, we invite you to catch the 2022 presidential aspirants as they face the nation in Panata sa Bayan, the KBP Presidential Forum, in collaboration with the Kapisanan ng mga Broadcaster ng Pilipinas on February 4th. That's at 9 a.m. Tune in to Signal TV Channel 250 HD and Channel 8 SD, also available on Signal Play. And those are the biggest stories from the business front this Tuesday, February 1st, 2022. I'm Jes Delos Santos. Mask on, wash hands, and stay safe. Philippines, we are One News.